Good morning, whoever's out there. Looks like I got out yesterday on Netflix right here at 9.85. Was a good decision. Fell all the way to 9.47 after that. So I saved about 80 extra bucks. Good morning to everyone. Say hello. Good morning, Randy. Say hello if you're in here. And let me know if there's anything you want me to take a look at. Now, let's take a look at the market. Yesterday we had a breakout of the downtrend that we were in, but that doesn't necessarily mean we're in a confirmed uptrend yet. But as you can see, we broke both downtrend pivots in one single day. Which means that the downtrend has been negated. And as I tell you a million times, what are the directions the market can go? Up, down, and sideways. Don't forget. So a trend must be 4 points to an uptrend in order to be an uptrend. A trend must be 4 points to a downtrend in order to be a downtrend. We only have 1, 2 points. All we have is a negation of this downtrend because we broke these pivots. So these don't count anymore, you see. That's how that works. So we have this essentially. Let's draw it all the way. Let's see. This is now essentially what we have, because when price went above these 2 pivot points, it erases those pivot points. And so all we have is this, this, and this. Well, and of course, prior trend. Okay, so we don't have 4 points to an uptrend yet, but certainly breaking above this level when we get there would constitute 4 points to an uptrend. But another way you can get 4 points to an uptrend is pulling back, which is what we seem to be doing right now, and then coming up and then breaking this pivot. So right here could be an earlier 4 point to an uptrend trigger point that gets you into some things even before a full-blown new all-time highs breakout. So that's where we're in. This morning we're sitting right here, pulled back from yesterday's close just a wee bit, but having broken those pivots is a really great sign. So it's definitely possible that we go into a backfilling situation, or you can see this got bought up really strong to these levels here before, 525, and that happened again over here. So this 525 level, whenever it's breached, it tends to get filled in, and so that's probably where we're going. We're probably going to fill the gap today, maybe tomorrow. What's today? Thursday. And then tomorrow we end the week perhaps with a little doji pullback type of thing like this. So overall we have a slightly green week on the weekly chart. That's what big money will follow. So we'll probably end up, we'll probably come down a little bit today and then fill in a little bit today as well as tomorrow until we have just a little bit of a green day on the weekly charts, filling things in. Weekly charts are a beautiful thing, and that's where big money, smart money in the market moves. It's on weekly charts. And that reminds me, whenever you're swing trading, remember to digest things in terms of multiple days. When you're swing trading, one day doesn't make anything. One day doesn't make anything. Although, well, yes, it can break a pivot point, but that'd be in combination with prior days. So what's happening any one individual day is never enough when swing trading to be able to say anything about anything. You've got to put it together. So that also means if there's one scary day, well, if it's extremely scary and panicky, then, okay, you can make an override decision. But, if there's one day which is moving against you, you're going to have to wait to the next day. Unless that move against you somehow in combination with prior moves tells you a much bigger picture, obviously. But if it's just a contrary motion, I mean, price moves naturally up and down and up and down. It has to backfill, it has to test. It's like testing your walls, testing the walls of the stock, of the trade, of the prices. You have sellers, potentially short sellers and traders selling and short selling, trying to test the strength and resolve to see if they can get any money out of short selling, of support, of bulls. And if they can't get through, then bulls obliterate. And then bulls are in control. And that goes on and on and on. Bulls might not be interested at high levels to fight. Bulls are interested at lower levels to fight. So bears get in control for a period of few days until bulls start getting in control again for a few days, and this is a cycle that goes round and round and round. So there's always going to be this back and forth. Being smart and being prudent, bulls will wait for lower prices. So that means there's a little bit of room. How much room? Short sellers that make money off of things going down don't really know, but they have presumptions, and they're going to test it as far as that can go. And bulls may not care until a certain level hits where they just can't believe the prices and buy a little. And then that causes a little more. And then that causes some short covering. And then you see it just starts to firm up again. And all of a sudden we're in an up move. And this back and forth move can only really be sussed out by drawing trend for, multiple pivot point trends. And nothing should really, in swing trading, nothing should really affect you until 4 days or more have gone in. So you really got to take things with a grain of salt. All right, we got 20 seconds till the market opens. So let's focus on how this market goes from here. Things are looking okay. Ooh, the rates actually just popped. That was probably on economic data. I'm not sure, but rates just popped. And that can add some pressure to the market. Which is fine, because we have room to go down, don't we? You have to remember that. How much room do we have to go down? Technically, we have about this much room to go down on the market. Technically, down to here and then double bottom, and it wouldn't change the fact that we broke this trend and are going sideways. It has all of this range to mess around. Now, when it gets down to this level, that could create an inverse head and shoulders pattern. So there is the possibility that it's under pressure once it gets down to this level. So the full range is to here, but a more realistic range of freedom of movement for the stock market right now is from the top of that pivot point down to that prior head and shoulders bottom, which you might even say is at the close of that particular day. So But this gives us a real idea of what easily could be arranged that the market moves. It has freedom to move across that distance there, back and forth. It can do whatever it likes in there. Now, if it's extremely strong market, it might only do that for a day and then fly, right? But how far we pull back through this line of freedom, through this freedom zone, freedom of movement zone, will tell you how much buying interest versus selling interest there is out there. And so you have to measure that. So again, you have to take things multiple days at a time to really know. All right, so opportunities this morning. Let's take a look. Koppen and HIPA are both day trade opportunities. Let's see, Koppen. Yeah, that's not looking super great. Well, yeah, actually it has some energy, but it really doesn't follow through, and it's been given back a lot. And then HIPA. All right, back to Koppen for a second. Let's look at that on the daily chart. All right, there's just not enough to see there, but we can see that since it's being bought up off of this breakout, it is probably likely to have further appreciation, and you could put a stop below the low of the day if you wanted to risk any money on that. It has a decent likelihood of not working out, though. So yeah, you want to size your risk accordingly. Anyway, that's for a day trade. Now, swing trade wise, we've got lots of things out there. And what I want to do right off the bat always is just take a look at my largest positions. Shoot, I moved NVIDIA around the other day and I forgot to put it back into the right folder. Let me see where that's supposed to be. Looks like it's possibly a pilot position. Okay. All right. So put that over in pilots. Okay. Now, I just got another exit on NNE. So NNE continues to follow through. Did you guys get in? This has been alerted multiple times in the last few days. So there you go on NNE. And I've hit a 1-to-1 already on a quarter of my position, because obviously we set up a 2-to-1 at 50% of our position. And if you didn't catch the new rule yesterday, this year, 2025, we're going to add, once you've hit all your 2-to-1s on something, so you've gotten 50% out and you hit all your 2-to-1s, then you can go ahead and take your stop out and use that, all the shares that were set on your stop, to set up another set of exits proportionally up to the 4-to-1 from there for the rest of the shares. Now that kind of will be a little bit rare for it to execute on all that, but there'll be a spectrum at that point of results. And it's better to be reaping than not reaping, is my 2025 revised plan. Wow, Bitcoin is making a very nice move this morning. I know that gold is supposedly way up there, and gold and Bitcoin can often be linked. Yeah. Gold is almost at breakout highs. Pardon me. All right. Now, I am going to go through my different positions, largest and worst. Worst opening of my largest positions first, all the way up to best opening, and then smaller positions from there. So Marvell is the worst open of my largest positions, and it's not even that bad. And it looks like it's being supported. All right. Then from there, I got Gigal. Gigal's doing just fine. And Reddit. Reddit is doing just fine. Lunar. Oh, by the way, just to finish up, continuing what I was just talking about converting from a 2-to-1 to a 4-to-1 for your remaining shares. This is all presuming that a add-on doesn't occur. So add-ons, of course, reset everything. Anytime an add-on occurs, that resets the whole 2-to-1. I think you're aware of that. We reset the 2-to-1s and we set up those 10 exits or however many it is that divide evenly. Like let's say your stop is $6.50 away. A 2-to-1 will be $13 of gain. So you would set up a bunch of exits to $13 up from where your entry is. And if it just happens to be able to divide very closely into however many shares you have, let's say you have 52 shares and you need to sell half, so that's 26. Then instead of making 10 exits of 2.6 or 3, if it's $13 your target and the maths out, then you could do 2 shares every dollar for 13 exits. So you have the ability to be flexible. Either, the whole idea though is just to lay out a bunch of exits. Okay, like the system is really that. It's not and realistic. So it's not that it has to be 10 exits perfectly divided across from here to your 2-to-1. I don't do that all the time. I do 11, 9, 8, 6, 12, 15, 14. I've even done 23 exits, because you just think in your head, how do you want this? And frankly, with regards to 23 exits instead of 11 or whatever, it is perfectly fine and almost better to be taking more exits. The more granular you can get things, technically speaking, it's better. It has a slight edge over fewer exits. That doesn't mean if you have 72 shares, that's 50% of 144 shares, 72 shares to lay exits out on across $7, that you do 1 share every 10 cents. And then you're putting in 72 orders. That's there's a certain point where it's a little bit beyond necessary. 10 is really nice. But 12, 15, 20 can be even better. Gets you a little bit more granular control. And as you get larger and larger positions going in life, erring on the side of more data points, control points, exit points, partials, can be beneficial. But, obviously at a certain point, it's overkill. At a certain point, So, but you can solve your math problems, is what I'm saying. Anyway, you have the variables are all there, and you can solve them in their different ways. I just got an alert on app. Let's see what that is. Okay, yeah, so that's an buy on an entry on app right now. We set up that alert. That's an entry on app with a stop at 300. I'm already in, and I can't add on because my stop doesn't go up. My stop doesn't raise. I could potentially think about increasing my risk to my 2025 risk unit, which is 0.5R, because right now it's at 0.125R, I believe. Let's see, and where is it here? Oh, it's actually a 3E position. So it's been building. So my average is is really even in a better place than that. Let me go take a look at the spreadsheet and see if I have an idea of what my average is on app. So out of view here on my multiple screens. By the way, check this out. So this is Marvell. I've been working on the spreadsheet a little bit more, and I was able to create a visual representation of how taking profits and adding on buys down your cost average over time. So bought it down, and then the price of Marvell's way up high. It's like 140 over here somewhere. But then I added on, and it brought it up to like 90 somehow. Oh, I kept adding on a couple there. And these aren't by days. These are just add-ons, data points. And then buying, and then the cost average coming down again because of taking partial profits. So that's pretty cool. I think I have app in here. No, I don't. Oh, all right. So let's go ahead and put app in here. All right, so I'll put this down here a little bit so we can follow along. And I'm going to essentially figure out whether or not I want to add on and like what average I'm going to get and where am I standing, with it. All right, so initial purchase on app. Okay, it's fetching my data now. I'm going to take a quick look at Bitcoin over here on my other screen. All right, very good, very good. Okay, it's not pulling up yet. Let's try one more time. Okay, there it is. Huh? Really? Is that simple? Okay. All right, well, this will be easy to throw in. So I bought 3 shares initially on the 7th of November at 237.3252 to be precise. Then I took a profit of 1 share at 303.33. I should raise this a little bit so you can see the graph forming. Okay. And then I bought 1 more at 299.12. Also, yeah, you might notice I have a running LIFO entry average versus the open cost basis. We can see the differences. So I've been working on this. -1,339.82. All right. I sold some at 339. That bringing my cost basis down to 184 from original price of 237. We're only playing with 1 shares here, so but you can see you get a massive result, 353, using the same technique. All right, and then I just sold one either today or the other day for 396.97. It's a while ago. All right, so my open cost basis is 162, and it says I should have 2 shares. Let's go take a look. I do. I have 2 shares. It says my cost average should be 326.51 in Thinkorswim. See, so that's incorrect. 326.51. So that's incorrect. Based on my entries, my cost average is 273. But actually, because I've been buying things down by making money, profiting off of it, it's actually 162.44. So 273 is my current average based on entries. 273. So we'll put that. When did I add on? Oh, over here. Okay. Yeah, I never put that. 273. But you can see how it messes it up in in Thinkorswim, it does not give you the right information, and neither does Schwab. So sometimes you got to do the math yourself. Trying to get back to, there it is, to the sheet. So my initial purchase was 237, and you can see after profiting, I've got it down all the way to 160. 237. Okay, so 273 is where it's been. I'm thinking about adding on today, right? So we're going to continue to go through this. My real reduced cost basis now, after all the profiting that's been going on, when you factor in all that into the Endeavor, it's like I have 2 shares now at 162.44. So really, I've reduced my cost basis a lot. 162.44 through profit taking. Now, so I would just write in real cost basis. Maybe I'll even type that as realized cost basis. Why didn't it change that? Oh, there it is. That was weird. It just delayed it. All right, so that's my realized cost basis. I have 2 shares down there. My actual break-even is here, and Toss is saying it's 326 up here. So which one do you go with? You go with this one. This one is our backup plan. It's good to know, because essentially, because of reduced cost basing, I have the equivalent of having bought 2 shares at 162.44, and we're at 358.48 divided by 166.44. So that means I'm up 115% on 2 shares, if you think of it that way. But my cost basis really for the running trade, for open shares, not in the total Endeavor, but for the open position, is 273 something, whatever that was. I wrote that right here. Now, I'd like to add on today if we could close. So right now, see, we're pulling back a little bit. But if it were to continue, maybe towards the end of the day, I'm going to make this final decision. But if it were to continue and firm up a little bit, I'd think about adding on. And what I would do is I would want to increase my purchased cost basis to the stop of 300. That would make it break even to the stop on the open shares, to say nothing of the profiting that could happen after that through taking partials, okay? That reduces our actual cost basis. But for the open position, so we'll call it just open break even versus realized break even cost basis. Okay, open break even. The open break even will only change when you add. It will never change as you sell, although in Thinkorswim it will, because it's using FIFO, not LIFO. So when it sells a share over here, it eliminates the original purchase and thinks you're at a higher cost base. It's stupid. It should be LIFO, not FIFO. So anyway, and then what I'm going to do is I'm probably going to calculate, okay, so with that many shares from here to the stop, how much would I lose? And then the answer is 0, right? Because it's break even. My stop is my break even. But I could consider at that moment, if I like, increasing my size such that should it get down to my stop, I'll be risking 0.5 R on that position. And the reason why I would do that is under the presumption that potentially the trade could move. It could move in my favor. It could work out, and therefore I would be taking partials, 50% partials up to 2-to-1 on that new position size, which I've already done. So I already have some padding. You see, I have you can figure out the profit. I have 2 shares at this price, right? Technically, I'm up this much. So 163.44 is the original, and we're at 360. Okay, let's just call it 360. So that's 196.56, 196.56 times 2 shares. So I'm up $393. So technically, if I add on to 0.5R, right now is $350 for me. If I add on to 0.5R at this point, even if it were to go all the way back down and I would lose that $350, I'd still be up $43 on the whole thing. But the result would be I would have a much bigger and better position. And you can use the spreadsheet, by the way, at this point to figure out hypothetical add-ons as well. So I could say, hey, okay, what would my entry average be if I added on a certain number of shares? And therefore, from there to a stop of 300, how much, when would I be down 350? And that's a little bit of a guessing game. So let's say I bought 5 at 359.10, which is right now. My average now is 316. And as a matter of fact, my open cost basis is 302.91, so that's not good. But in any event, that means I have a total of 7 open shares from 316. So $16 times 7 is $112. So I would lose $112 if it came back down to that level. What I'm confused about here is maybe the math is not correct here, because then why does it say my open cost basis is 302.91, which is probably correct. I mean, I got 5 shares up here, and I essentially have 2 shares of 162. And so that works out to be an open cost basis average of 302.91. But that's not $350 of risk unit to my stop. And I guess that's just because of the situation. I have to review this math either later tonight or over the weekend, because that is very interesting. So what if I bought 4 shares instead? So I guess there's going to be some kind of a sweet spot between increasing position size, increasing your open cost basis to where you could potentially no longer be profitable, and the likes. Also, if consideration is, and then let me get rid of this, that in a few days, in like 2 weeks, we have earnings. And right now, I essentially have a profited padding from 166.43, 163.44. Randy, I'm showing 0 dropped frames. So that might be on your end, sir. Like, it reports to me drop frames. And I've got none reported. Oh, maybe on Twitch. Okay, well, on YouTube, I think everything's smooth. I'm not sure. Possibly. Okay. So anyway, YouTube will be much smoother if you're having any issues. I think it's showing 0 drop frames at all. So anyway, I would want to wait until probably earnings and just take additional profits on the 2 up to 4-to-1 if this thing continues before then, so that I have a huge amount of padding, because I essentially have 360, 162.44. I essentially have a minus 55% padding going on from profits that I've been making. That's a lot better going into earnings. Like, if you're going to risk holding something through earnings, ideally you want there to be some padding that you've created from having gotten in earlier. I can use that 55% padding to sit through earnings with very little concern, right? Like I did on Netflix. So, I sat over here. I had a decent spot I was in, and then big gains. And it turned out the right decision was to sell everything up there, which is not what I necessarily always want to do, but I did. And see, I'm getting a message, possibly. And sell up there. And so, but the situation is similar on app in 2 weeks. Oh, all right. Some neighbors, who may be coming by in a few minutes. So I am going to end the stream right there. We will go back into the group and talk in the group. Thank you for tuning in this morning. And I'm going to let you know how everything's going and if there's anything interesting to get in. Randy, have you been getting in anything? Because, ideally we want to have a minimum of 3 open positions. A minimum. I mean, when things get concentrated, the ideal is to be holding 4. Sometimes that gets messed up and you end up holding 3 or 2, but it's at the pinnacle of a runaway market, and you're making lots of money at that point. But 4, you want to have at least 4 because you need them to counteract each other. So you can't really say you're testing anything out and feeling it and gaining some idea of what it's like unless you have 4 or more open positions going. All right. Okay, you guys, have a good one. Let's see if this button works now. No, it doesn't. Never does.